Tuesday, October 17th. Market analysis, Stan Ehrlich. And you guys know I start out with the indexes, the spider in particular, the E-mini, in this case, December futures contract, E-mini, code is ES. We had on October 6th, a bullish engulfing ER buy signal that causes the price action to turn green the moment the criteria is qualifying, and that is during the trading day. We also, at the very top of the market, had a bearish ER sell signal, and lots more of them earlier in time, but I'll just show you these last two, as well as two others, by the way, at the top, total of three. This is the October low. It was actually 2 days earlier, a little bit lower than the low of the bullish engulfing on October 4th, in my opinion. The E-mini is about to, it looks like it's about to break into new high ground since the end of September 21st, so since September 21st, and maybe even a day earlier than that, if the rally becomes strong enough today. It is very important that the markets stay at these prices and accelerate upwards, hopefully yet today, and certainly tomorrow, if not today, but not to back up. I do not want it to close below unchanged. We have a bullish engulfing at the moment that would turn it into the exact opposite bearish engulfing, and I don't want a bearish signal of any kind when it's trying to push through resistance. I want the bullish engulfing buy signal on October 6th to perpetuate itself, and let's see a new high close at a very bare minimum above the previous highs for the previous 5 days would be very nice, and off we go. Next chart is the 1 minute chart on the December E-mini, and we're slipping a little, but we're up on the day 130, so I don't have a problem with the spider being up 130, and we're up 9 1/4 on the E-mini. Next chart, we have a new high and a potential new high close, and that close could easily be above the previous highs for the spider. Now, the next chart, well, I'm going to go back. I'm going to vary a bit here. I'll stay with this chart. The low before the gap down was 438.43. Today's high is 438.14. So 19 cents ticks above today's high will finally close the gap from the gap down opening on September 21. We are now in new high ground since September 21. I want to stay there and close above the previous highs, finish closing the gap, and even close above the red zone here, which is the gap closure price levels. And I want to grab it and pull it to the right, and I think that's it. Good. So next chart is QQQs having a little bit more trouble getting above yesterday's high. Will be an outside up day, and it does not quite there yet. We're now higher on the day just by a few ticks, but we have a bear trend line to deal with, and we have also a bullish support line underneath the market to deal with, and they are coming together ever so slowly. So this is the large pennant or wedge. You could call it a trading channel, but it's not quite parallel. Downward slanted formations, which this is, whatever you want to call it, usually break out to the upside. Next, we've got the NASDAQ futures, and it's basically the same as the QQQ. I just don't have my lines drawn in. I'm bullish, as you can tell, looking for conviction, looking for new highs, looking for proof that the trend is more solidly in an uptrend. Next, we have now for the third day in a row, the DIA, the Dow Jones, with new highs. It has been chewing its way higher. it is closing in new high ground for the month. And ever since, and again, alarm going off. That's a good alarm, I think. Okay, let's go see. No, it's not. We have now dipped back down into support on the E-mini. And let me delete that line for the moment because it will be irritating. Going back, sorry about that. Forgot that I had an alarm line set up. So the Qs are almost an outside up day, but it needs the follow through. We got to have the follow through. It is very important that we have the bullish follow through, or we could flip flop right back down in the bottom of this last 6 days range. We haven't broken out on a closing, that's the important part, basis. And this looks like a bull trap if we don't stay up here. Don't want to say that. Let's go to the October low chart. You guys know that I've been talking about this a couple of months before October. So here are the last, I don't know, what is this, 10 or so? September 29th is the last of 3 in the last 30 years that did not have lows in October. 2015, it was September 29th. 2016, it was November 3rd. And there's only one other more than a decade before this, and that's it. Since 2016, there have been no other lows that weren't in October, and some of them have been dramatically important. It is not to be taken lightly. The October lows have a really great 90% in the last 30-year track record, and it looks like they are in progress again. Now, my bullseye was yesterday, and I was down at 406 or 7. So I was approximately a week too early. The market turned a week earlier than I expected, but in October and at a higher price at 420 instead of 406 or 7. So I'm very convinced at this point that we have seen the October lows. But this is, again, I can't stress it more. We're right here at a very edge of the precipice, and we have to close above these highs, especially if it can do it with a sharp rally, maybe on the close. But today would be nice. Next chart is going to be futures. E-mini again, different perspective, same chart. The NASDAQ, again, a little different perspective. You've seen it. Now interest rate futures. The trade you're looking at was a new short with an ER3 position trade and the default inputs on April 12th, and we stayed about 6 months short all the way down to approximately 112, and we were short at approximately 133, and we're out a few days ago. Is our bonds trying to bottom out? I'm watching very carefully, and I don't have an answer. I do expect a bottom in the interest rate futures markets very soon, frankly, this year. I'm watching for the telltale signals to scream bloody murder. This is a long-term bottom that just is happening, ing, or is about to maybe, or just did. Next chart. We're dropping like a rock in 10-year notes also, not a surprise, and getting close to being overbought, but neither one so far. Now, crude oil, higher highs, higher lows over time, already bottomed out in support, gapped up, came back down, closed the gap, in support again, made another high. I think it's going to keep on going up. Next, heating oil. Pretty much the same comments. Support, bounced, minor correction for yesterday and today. I don't think this is a top being built. You've got higher highs, albeit not by very much, over a long period of time, and pretty much a flat bottom, almost exactly. We'll see what happens. I'm friendly to bullish. We're currently short the NASDAQ. We got short ER3 on the opening on October 12th. The yellow lines are always the STS smart trailing stop, and the green line is simply plotting from our entry point to the previous close. We're going to be updating this so it goes to the current quote. Next, look, good trade so far. We have a buy signal at the bottom of the gold market. Fantastic. It took off like a bat out of hell, already up into resistance, already got overbought. Right now, it's just twiddling around a little bit. I think it could maybe rally up to 1,990. It might stall out here a little, a minor, slightly larger downside correction first, and then higher. Next, silver. No, I'm sorry, this is the gold trade from that signal you just saw. This is an ER1 entry at October 6th, 7:45 California time. And the green line represents the trade every 5-minute by 5-minute chart. The yellow represents our moving inside the day. Every day almost, we move our stop, sometimes dramatically, depending upon what prices do. And the stop is not based on price movement only. It's also based on some other technical features. And we took a really nice trade out of gold. I could manipulate the STS input to slow it down a little bit so that we miss this break and we're still long. But that's after the fact, 2020 hindsight, and that, you can't bring your trade back. Next, silver. No signal at the bottom, oversold at support, doing great. Bearish, bullish engulfing in progress today, probably. It's going to push its way up even more. I'm looking next for about 24.02 and maybe 25.3. Next chart. We're in a trade. Platinum bought the bottom day. ER1 entry. We have new highs and a new high close likely for this trade. And you can see some other trades that were very profitable on the short side, very profitable on the long side, a little losing trade. That was a little loss. Profitable trade and a profitable one in progress at the moment in platinum. There we go. There it is. So far, so good. Next, new lows, high-grade copper, but we're not staying down there. So this is what I don't want to see in reverse for the stock indexes, because they made new highs for a while and they are slipping back a little bit. We're only 67 cents higher right now on the E-mini. I want to go take a quick peek at that. And yeah, we did make a slight bit new low here on the 1-minute chart in the last few minutes. Still 65 higher. Keep an eye on that. So this could be a little bit of a bear trap momentarily for high-grade copper. Next, soybeans, buy signal 3 days ago, got long, ER3, almost exactly the low of the day, the next day after the signal. That's how ER3s get in. ER1s get in the same day of the signal. We have an ER1 in progress as well. I won't show you both of them at once. It gets a little complicating. So great. New high, probable new high close. This trade's doing very, very well so far. Soybean oil, ER1 is long, almost positively. ER3 just missed by a hair the low of the day 2 days ago. I'm looking for a move up to what I think is still a neckline on the head and shoulder top, which is a wide head double top. We got a sell signal at the top of the market. Great. Okay, so let's see if this buy signal pans out. I do not, for the sake of the head and shoulder top, to close above the neckline, but we could gain a little bit more strength to get up to 57.14. That's it, maximum. But anywhere between now and that level could be a good place to go short, because I am not believing this bullish engulfing is going to turn the whole thing around yet. I'm expecting out of the head and shoulder top formation to have a downside objective of 50. And that still is in progress. Next, meal. Never broke out of its head and shoulder. Big fat shoulders, couple 3 months in size. Same for the head. Same for the last shoulders. Now, this rally is kind of like a pimple on the last shoulder. It doesn't really change much, but it can't go sideways too much more or rally up too much more, or it could completely ruin the formation. Next chart. And we're looking at corn. I expect to see new lows to move down. Resistance has stopped the rally. The trend is down. We got lower lows, lower highs for the most part over extended periods of time. Next chart's wheat. I think corn is going to do what wheat has done in the last month or two. Next chart, cattle. Are we building some sort of top here? I really can't come to a very good conclusion so far. Couple of days, stopped at a little bit of resistance, not anything particularly super profound, but yeah, I probably should put a little red zone in here around the high of 2 days ago and the day before that and yesterday. Not a bad place. Okay, I probably will. So I'm looking for a move down to support. Let's see what happens next. I just want to wait. Next, new lows, probable new low close, and maybe below support. Hogs could be about to drop like a rock pretty quickly. Depends on the close. I don't want this to be a bear trap, or it's going to come popping back up a little and close maybe even higher than yesterday's close, which is the low of the day. So it wouldn't take much. That would be a bear trap and cause a real nice rally, maybe up to 73 or even 78. So far, that's not happening. So far, it is at the bottom of support, and it hasn't rallied. So if it goes down more, it's probably a significant bearish breakout. If it turns around a modest amount and maybe close higher on the day, that's exactly the opposite. Next, OJ, who knows? I don't know. Green tree disease. Next, I am getting my rally that I was expecting in cocoa. It is a little earlier than I thought, and it is now approaching the price levels at which it would be perfect for it to go sideways. For this little arch mark as the time frame and price level, like the first shoulder. I'm kind of expecting it to do something similar that it did over here on the first shoulder, inside of this arch mark. We'll see what happens. Too strong, head and shoulders dead. Goes straight down from here. Well, you got your shoulder. It did rally high enough. It's just a little bit too early timing wise, but the price level's right. So the pattern would be good if it starts heading down immediately. Next, coffee, resistance, overbought, probably going to flip-flop back down a little bit, maybe a little more than a little bit. Remember, we've got lower lows and lower highs over a substantial amount of time. Pressure, bearish. Watch out for downside breakouts. Next chart is going to be the sugar. Don't know what to say about sugar. Obviously, higher highs and higher lows, so you got to be bullish. You got to stay with the trend. The trend is your friend. Next chart. Cotton, the exact opposite. New lows now today and a downside breakout, but a bearish, and an oversold condition. Now, on bearish breakouts, it's not uncommon to see bearish oversold conditions, but they are going to last another day or two. And we may drop down all the way to 76.90, 77 quickly this week. Next chart. It's only Tuesday. We're back to the E-mini. You guys have a great day. Talk to you tomorrow.